Hey traders, Jason here from Levitt Brothers. Let's talk about the current state of the market. First, just not a reminder, but a heads up. Next week I'll be offering our once a year Black Friday special. Buy an annual membership, get 3 months free. So you can look for that if you've been on the fence, thinking about joining, not really sure. Next week is the time to do it because we offer a special. It is good for existing members who could just re-up their memberships or new members. So anyways, let's talk about the state of the market. We'll look at the indexes. We'll look at some breadth readings. We'll look at some individual charts, see what's going on. Market did well August, September, October, when sometimes it's a little sketchy. It did, the Fed raising or lowering rates in September didn't act as an inflection point. Earnings season had gone pretty well. The market was chugging along, doing just fine. And then we entered November and everyone was assuming, hey, we're probably clear sailing. We're going to rally into the end of the year. We're going to rally into next year. But then this month has been pretty bad. The overall market, not too bad, but beneath the surface, tons and tons of damage have been done, mostly from the thematic names that we've been trading for the last 3 to 6 months. So want to kind of take a step back, take a deep breath, get an idea of what's going on here. All right, so first we'll talk about the indexes. So here's the S&P 500 weekly chart. Nothing really stands out as being a major warning. Obviously, we had the big drop here with Liberation Day, whatever it was called. Then the index just steadily trended up above its 8-moving average. Right now it's below it. It dipped below it the last 2 weeks. Now it's below it on a closing basis, but obviously we have a couple more days left. Nothing really stands out here. It's like normal stuff here, big deal. So we topped over here. We've been down a couple weeks. It's not a big deal. I mean, you go back to 2024, we had a dip here, and then we moved sideways for a couple of months. We had like 3-4 months of sideways movement here. Pretty normal stuff. Just because we dip here, maybe down to the 21-day moving or 21-week moving average, that doesn't mean the uptrend is over. It's just the market's taking a rest right now. Right now, the index is flat going back like 2 months. Again, no big deal. Trend is up. Overall, things are looking good. You just got to make sure you're playing the right stuff. NASDAQ, same thing. It's more volatile. So the drop here are more pronounced, but same thing. It's like you're looking back, like we're unchanged going back a couple months. It's normal stuff. I mean, the steadiness and consistency of this trend means it's going to rest at some point in time, whether we dip to the 21 or dip below the 21, or maybe we just move sideways over here for several months. We don't really know what's going to happen, but so far I would consider this to be like a normal week period within a pretty good uptrend, and I don't think anything stands out as being like overly alarming. There could be warnings elsewhere, but not here. So zooming in, here's the S&P daily chart. Okay, nothing really to add. The index is, it moves up and consolidates, moves up, consolidates, moves up, consolidates, trends up, higher highs, higher lows, bigger consolidation pattern here, and now we have a wider, more volatile consolidation pattern here. So we are below the 50-day moving average for the first time since way back in April. We do have the 21 over here, which is starting to curl down. So we do have some overhead resistance. So some work needs to be done, but overall, it's not a horrible situation. But the price is, the current level is unchanged going back a couple months. There's been some failed moves up. So we got to be careful with trading. Okay, we can't be careless. Like when the market is just like trending up and everything's acting really well, you actually are rewarded for being a little bit careless. You can't be careless now. You got to be trading the right stuff. You got to have stops in place. NASDAQ, same thing. I don't need to repeat stuff. Okay, overall doing well, but definitely some warnings here with below the 50-day moving average. Maybe we have a deeper dive right in between the 50 and 200. It's going to take a little bit of time to fix this chart. And as I already said, you got to be a little bit more careful with what you play because not everything is participating. All right, let's move on to some breadth readings. Okay, here's the S&P 500 up top versus the 10, 20, and 50-day moving average of the 80 line. Okay, and notice with the 10-day moving average, like most of the prints over the last 2 months are below zero. Okay, so even though the market has kind of moved up and over, most prints below zero, it's definitely different than over here where most prints were above zero with just a couple drops below. So there's definitely a change in character. Same thing with the 20-day moving average. Most prints for the bulk of the move up were up here. Now you can see this lower range. Okay, it's pretty obvious. When I draw a box, you can see how the 80 line oscillated above zero most of the time, and now it's oscillating at a lower level. And then with the 50-day, it's just been trending down, 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 down for a couple months, and now it's at its lowest level since like beginning of May, end of April. All right, so there's definitely been a change in character here with the 80 line, the 10, the 20, the 50, they all look back periods. The 80 line is below zero, has been spending more time below zero, especially with the shorter ones, than above zero. So definitely less participation. Strength has thinned out. We just don't have good broad-based strength here. Day to day, week to week, advancers are less than decliners. Okay, here is the 80 line with the cumulative. Here's the cumulative 80 line with the NYSE. You can see it's been trading flat for a couple of months, which is essentially what the market has been doing for a couple of months. So this is in line. What we want to see here is we want to see it get back above the 21 over here. Okay, what we don't want is to come up, get rejected, and like trend down. Kind of like what happened over here where we lost the 21, we moved up, bounced around a little bit, and then got rejected and moved down. We don't want that, okay? So we want this to, if this wants to trade sideways in a box, it's fine. We don't want it to fall off. Last one with the advanced decline line. This is advancers. This is the 10-day moving average of advancers versus total stocks. So I want to bring your attention to back here, the early 2025, the drop earlier this year. Notice that as the market legged down, tried to rally and then legged down again. Notice that advancers versus total stocks, there were no high prints here. Okay, there was a negative divergence over in January, February, and then for the entire time the market was dropping, there were no high prints. So you look at today, the market has moved up and over. It's not even dropping yet, and yet we have no high prints. So, if I were to cover this up and you wouldn't even be able to see it, you would think that's what's taking place here is the exact same thing that took place over here, but actually that's just not the case. Beneath the surface, the market is much weaker than what the indexes would suggest. In fact, I can even go back to here and say there's not that many high prints. Okay, so on the surface, the market looks good. Beneath the surface, there's something going on here because advancers versus total stocks is not exactly at a high level. All right, let's look at a few other things. So here is S&P 500 versus the large cap new lows, mid cap new lows, and small cap new lows. So what I want to point out is that oftentimes the market gives warning shots ahead of time. So if you look back to December and January, last December and January, you had these sudden spikes in new lows. Okay, these were in January, or these were in December and early January, and then the top occurred in February. Okay, so you get like a warning shot like 1 to 2 months ahead of time, and then the top forms at a later date. So I'm thinking, like, and this plays out all the time. So I'm thinking like the warning shots that we're getting here. So either a top is in place right now, okay, or what we're getting right now is a warning shot for maybe we top over here in December or January. Okay, that's what I'm thinking right now. Okay, either a top is in right now, or what we're getting right now is a warning shot. So if the market firms here and runs up into the end of the year, that's great. It'll feel good. We can make some money on the long side, but let's not forget these warning shots that we're getting right now. All right, couple comments about stocks above moving averages. Here's S&P 1500 stocks above their 50-day moving average. Notice, during the 2024 rally here, lots of prints above 50%. Early parts of this rally, lots of prints above 50%, and then the rally continues on, and we get all these low prints. So many, many less stocks are participating. The 50-day moving average is not a high bar to get over. If stocks are acting moderately well, it shouldn't be hard to be over that moving average. And the fact that starting in early September, this indicator broke down, and we're now down in the low 30% area, that tells you not a whole lot of stocks are participating right now. Here is S&P 500 stocks above their 200-day moving average. So again, it's like 2024 rally. We have stocks above their 200-day moving average basically oscillated between 60% and like 85%. It's nice, steady support there. Then you come to this year's rally, okay, 2025 rally, and we don't have any prints up here. No prints like from the low 70s on up. We have no prints. And then over the last couple months, this has been like steadily moving down. Right now, it's barely above 50%. So there's definitely a difference between here and here, which has me thinking like even if the market firms here runs up into the end of the year, I think a top's going to form. A top is either forming right now or it's going to form in January if indicators like this don't immediately fix themselves. All right, here's S&P 500 stock, S&P 500 stocks above their 20 and 50-day moving averages. Similar concept. During the early stages of this rally, we had oscillations from like 40% up to 80, 90%, but now the oscillation range is much lower. Stocks above their 50s, oscillation range above 50%. Now it's straddling the 50% line. There's definitely a difference between this and this and this and this. Okay, there's definitely less stocks participating right now. Here is a same chart, but with the NASDAQ. So notice, beginning parts here, you get lots of prints above 50%, but now we're getting much lower prints, lots of prints above 50% for the 50-day moving average. Now we're getting much lower prints. There's definitely a change in character here. Many, many, many less stocks are participating. Right now, only like 25% of stocks are even above their 20-day moving average. That's pretty darn bad. All right, let's look at some individual stocks because the reality is my research mostly deals with individual stocks. If individual stocks are doing well, that tells us something. If they're not doing well, it tells us something. Even if the indexes they look great on the surface, I'm always going to get my best cues from individual stocks. So I'm just going to go through a couple of them. Here's APLD, ran up huge. It dropped 50%. Okay, if the market's strong, it's not going to drop 50%. It's a normal drop. I mean, we could look back like 3, 4, 5 years from now and think that this is a tiny drop. But in the moment, this is a major warning when you have stocks, these thematic names that suffer big losses. Cipher, another one, great trade at Levitt Brothers, came out of a base here, paused here, ran up, came down and tested his 21 and then ran up again. Had a resistance level there at 22, kind of volatile, breaks out, volume huge, but then it gave it all back. And notice how big these candles are, okay? Notice how big they are. When you have a huge run and then these candles get huge, that is a sign of a top. And then as you can see, the stock just went down, 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 down. Now there's a ton of overhead resistance to got to deal with. I don't know what's going to happen here. Maybe it's got to go up and then double bottom and then go up. Maybe it's going to go up, get rejected by a moving average, and then leg down, and maybe we're going to drop all the way to $10. I don't know what's going to happen. I do know that this chart is broken, and it's going to take some time to fix. Here's EOS, everything looking great. Nice bottoming here, runs up. Consolidation pattern here, breaks out over here, huge volume, earnings involved, and then it just gives everything back and is trading at like a 6 or 7 week low. Okay, this is not how stocks act when they're strong. Okay, when they're strong, they're steady, they're consistent. You have smaller candles. When they start to top, you get these huge candles. Huge candles, huge volatile candles are a sign of a top. Nebius, great stock. Obviously, you can see some gaps and everything, but huge move down here, rallies up, lower, lower high or lower low. I don't know what's going to happen here. Maybe it can base here and then go up, or maybe it just bounces and then legs down again and fills the gap all the way to here. I don't know, but I do know that the character of the stock here, where it steadily moved up and over with small candles, and then suddenly we have these wide range and big candles. That's the change in character that tells you something's different. Oklo moved up, came down, tested levels, moved up, everything looking great, and it's been cut in half. Okay, so changing character here. And finally, Rocket Lab, great stock, done well, not necessarily in the AI name, so different, but yet the result is the same. Moved up, consolidated for a couple months, ramped up here, tons of volume, and then it just proceeded to get crushed week after week after week, and it's now down. It's like a bad week away from being at its lowest level since July. Okay, so there's been a definite change in character among these individual stocks. Okay, so overall, market is looking very iffy. Indexes seem to be a little bit rolling over, although they're not in terrible shape. Breadth is in pretty bad shape. Advanced decline line, new lows spiking up, stocks above moving averages. Everything points towards the market getting thinner, more selective. It's not broad-based strength. There isn't broad-based strength anymore. And then when you look under the hood at individual charts, it's just there's so much damage done. It's hard to be really excited about any type of end-of-year rally. It could happen, but I think right now you got to be very defensive. Make sure you're trading the right names. You got to abandon the names in the past that worked because they're not working anymore, and don't cling to stuff that used to work. That's just not, okay? Good luck. Hope you got something out of this, and I'll see you next time.